Tariffs are here, but there may be a loophole. What a difference a week makes. Markets bounced back hard with the S&P 500 up 2.4%. A quick recap. Monday, stocks shot higher after shaking off last Friday's weak jobs report. Tuesday, things cooled when the White House hinted at new tariffs coming next week. It was especially rough for healthcare with threats of 250% tariffs on pharmaceuticals. By Wednesday, though, optimism was back. Apple struck a deal to dodge some tariffs by pledging an extra $100 billion for US manufacturing. Then after hours, the White House signaled semiconductor tariffs could hit 100%, unless you invest in the US, which in that case, you might pay nothing. So Thursday, markets opened strong but fizzled out after a weak treasury bond auction. Then Friday, solidly green again on, a lack of scary economic data over the week, and September rate cut odds are pushing back up to 90%. So what now? The broad tariffs are officially live, but there appears to be a new get out of tariffs card, just promise to invest in America. We saw this with the EU and Japan trade deals, and now with Apple and semis. So let's call it Taco 2.0, a new face-saving way to pull back on tariffs. However, this still doesn't erase our concerns. We still expect tariffs to add to inflation and slow the economy, especially now that businesses can plan around them. After this week's lull, a lot of macro data is on tap next week. New inflation, spending, and sentiment data. We'll see if tariffs will finally start showing up in the numbers. So buckle up, August is just getting started. Stay tuned.